Good Friday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor. Call your broker dealer. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And I'm going to share my screen. While I'm doing that, if anybody is joining us for the first time, Will and I, we do these shows in the morning to help answer any questions you have about the Market Chameleon tools, data, or analytics. If you want to come on a show and ask your question live, we have a link to Zoom. It's out there on the live chat on YouTube. Click on that link. It takes you over to Zoom. When you're in Zoom, at the bottom of the screen, there's a button, raise your hand. Click on that. It'll ask you if you want to turn on your video camera. You don't have to. Once we let you in, you could ask your question live. If you prefer to type in a question, you could type that question on the live chat. Will's watching and he'll read them back to me. And while we're waiting for questions to come in, what we'll do is start out taking a look at the pre-market report to get some insights on stocks that are trading in pre-market hours. Then we'll move on to the questions. If we don't have questions, I'll navigate to a different part of the website. See if we get some insights. And I think we had some questions left over yesterday, so I'll try to get those as well.
Perfect.
Sound good? So pre-market report. These are stocks trading in a pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Coming down here, and I see 20 stocks made our percentage gainers list, 44 in the decliners. So from this perspective, right now we're looking like we're set up for a bearish bias at the open. But if you take a look at this list, you'll see that there are a lot of stocks in there that are low cap stocks, low market cap stocks, ETFs, leverage products, closed-end funds, anything that's listed on the major U.S. exchange. If it's trading in pre-market hours and it meets our thresholds, it can make this list. And what we could do is narrow down this list to a smaller group of stocks. And to do that, we could use the filters above here. And I'll start out with this one in ETF. This filter, if you click on it, you get a list of ETFs to choose from. The top one, very first one, SPY. Let's click on that. And when you do that, the list below, you can see got filtered by stocks that are holdings in SPY, which are the S&P 500 constituents. And we see here that 4 stocks made the percentage gainers list, 4 in the decliners. So from this perspective, looks like we're pretty even or neutral at the open. I see these little E's are letting us know that there have been stocks that are reporting earnings. They're probably reacting to that either yesterday after the close or this morning before the market opens. But, just looking at this list, some of the things I see, Apple, Meta jump out. And I wanted to mention something while we're waiting for questions to come in. Because I am using like that chat GPT, the AI, and seeing how it could be applied at least to our business, our industry. This is an interesting article here. This is on Bloomberg, how AI is coming for wealth management. And not only do I, because even in the short period that I've been trying to use it and play around with it, it seems to me like it's just been improving almost like every week, so
probably every day, right?
Almost every day. And it's amazing how quickly and how good it actually is, that it's one of those technologies where you're using it and you're really surprised, especially if you kind of understand how data works and processing data and interpreting data, and then the speed at which it's learning and able to interpret what you're asking, going back into its database and coming out with these outputs is really, truly incredible. I mean, I really believe that this really changes things going forward. And we're going to see a lot of technologies coming out using AI. And this one here talks about wealth management because we could only look at it from our perspective in our industry, what we think it will help. It's an interesting article, you could read about it. And I think that there are two things going on, that it could help with. Of course, wealth management, it's a big industry. It's actually, Wall Street has come up with good formulas to manage people's wealth.
And
But
taking a little
not
bit of the wealth for themselves, right?
and taking a little bit for themselves, but with diversification and maintaining the wealth and putting it in interest bearing. But they haven't come up with a good formula for wealth creation, except for themselves, right? And if you could, use some of these technologies, and I think one of the biggest barriers to it, at least that I found, is that our financial system is very complicated. It's, there are people, you could go to college, you could go get a master's degree, you could get a PhD, you could then go and get a job on Wall Street. And it's always a lot of stuff going on, and a lot of people that don't have that enough knowledge. They think they do, they think it's easy. But if you look at our financial system, I think probably if you took the rule books of any industry, the financial system has one of the biggest, and it's very complicated, and you're dealing with risk, and to understand risk takes a lot of time and experience. And I think that maybe this AI can help along that path. They did a study, I think it was University of, I think it's like George Washington University. They do a survey, I believe, every year to test people's financial literacy. And these are, on educated people. And something like 50% of the population, goes to college. You could be a doctor, you could be a lawyer, all that, extremely smart, but 50% of them are financially literate. And that's because our financial system, it's not an easy thing to navigate. It's very developed, it's very complicated. There's lots of inner relationships going on. And, if you could bridge that, if you could help with that, something there could help with that, I think it will be a big breakthrough to a lot of people, especially if we start talking about, not only wealth management, but wealth creation. So something to keep an eye out, because, our industry, the financial industry, is a good candidate for this technology. It is actually probably going to be the financial system will be one of the biggest benefactors, I think, of this technology. Now, I don't know. I'm sure it'll probably impact lots of industries, but I can't speak for those industries. But for sure, it will impact the financial industry in a good way.
In that thought process, I did read an article the other day. I think I may have sent it over, but not sure. It was in the journal, and the first company has been created using the AI, OpenAI API or whatever, and it was started by an accountant and the CTO just two people, and basically they created an app that will allow you to do all your accounting yourself. And it's like it basically is constantly looking at the tax codes and the changes and can make analysis for you. And I mean, we've always talked about the accounting.
Yeah, imagine, imagine an app that will, analyze your data, your personal data continuously, right? Which a human being, it's hard to do, but continuously looking at your data, looking at your information, matching it up by optimizing, your taxes.
Yeah, imagine you attach your credit card statements to it, you attach your banking statements, it's constantly reading it, popping everything.
It could move your savings to higher yielding accounts. It could find you better priced mortgages. It will, look for your spending patterns and habits and give you suggestions.
On restaurants. On restaurants are the best deals.
Best deals. It could, talk about saving for retirement, saving for your kids' college, best way to do it. These are things that, it's very labor intensive to take an individual and analyze all that, and with all their data, all this stuff, because it's case by case, right? And then create a strategy or a plan. And really, like, when you're looking at this AI and the speed and it is very smart. I'm not saying it could replace completely people. I think you still need some human touch, but this will definitely speed up the process and make it more efficient. I think
Bruce made a comment. He said, if AI becomes successful in making market decisions accurately, then how will anyone have an advantage, since everyone can use it, basically?
Well, exactly that. Those advantages right now, some of the advantages that people have might go away, right? So certain advantages that people do have right now, those might go away, some of them. And we'll see how, but I do think that overall, the financial industry will benefit and grow from this service, because it will make things more efficient. It'll make things easier. It'll make, it'll less costly. It'll bring down costs on a lot of the processing and analysis. So it's still in its early stage,
Yeah, we're less than a year.
It's not going to be
ChatGPT.
Yeah. But I do think in the next year, we're going to start seeing applications using these AIs. We're going to, not only are we going to see, we're going to start feeling it, I think in the next year, the way it's moving, how quickly, that there are people probably working on it now. And look, I'm looking at it myself, looking at the OpenAI API and seeing, like, well, okay, how do you start out small to help out with little tasks, right? So you want to see, help me out with these little tasks that are routine and you do day to day. If it could take those little tasks over and you have it calibrated, then you could free up your time to do other things, right? And that's how you kind of started out. But definitely, out of all the technologies, and there's always promising technologies out there that you read about, this one is something that, like, really feels like you're blown away by it, when you use it.
artificial intelligence has been used in technology, quant-based trading firm for years, right?
Yeah. This is just available now to the masses, right? So all of a sudden you get access to this, which is amazing, right?
And it should start to make things more efficient, right? That's what we always talk about. Will things become more efficient? Will it, like the accountant, Rob actually said I would use that tomorrow because he's about to lose his account. Like, I mean, it really is a service that if it could be done, you can attach, and we just, talked about it. You can imagine how much more efficient it would be.
Yeah. I mean, I know everybody probably like us when it comes to taxes, it's stressful because, and we're in a finance industry. But when I look at those tax returns, I have no idea what's going on. There are like numbers everywhere. You have to be an accountant to understand them. They're moving. You're like, what is this? What is that? You have no clue what's going on. I think even Albert Einstein said something like, that he understands whatever more about the universe than about tax return. That's that the tax returns give him anxiety. And if you could have something there that's just keeping track of all the things you need to do to prepare for your taxes and just optimizes it and does it for you, I think that would be great, right? So you don't have to have that anxiety of going to your accountant.
I mean, you're trusting
you're producing all these.
You're trusting a system, not an individual, right? But
you're trusting
if you understand the intricacies of the system, they're constantly, the tax code's up, so they're, trolling through data and finding, opportunities and using the tax code. So they probably will, if they recommend something, they'll have reasoning behind it, right? That you could then go to the IRS and be like, this is the reason why, right? Where right now, everything you do, you trust your accountant that it's right. And we've, full disclosure, we've gone to, numerous accountants, and everyone says the other's accounting is, not perfect.
Correct. Yeah. If you get three different, you get three accountants, you're going to get three different answers. And that's what's scary. Like, what's the right answer? But I don't think it's going to replace it. It's going to make accountants more efficient, right? Because the accountants themselves will be able to work faster, more efficiently, using these services, using AIs.
So I think that have a market-related question from Michael McCrae. He asks, are market makers always the other side of the options trades, or do they try to fill natural buyers and sellers at the same price level before taking balance to fill positions?
Right. Well, that's a good question. So when I'm going to navigate actually off. Let me go to the options chain. So the question is, when we see a trade happening, there are lots of trades in SPY, these options trades. The assumption is that these quotes here, I'm looking at bids and offers and calls, bids and offers and puts. The assumption is, well, these are market makers providing liquidity. And when somebody trades, it's a end user, customer sending an order into the exchange, and that trades against the market making quote. And the question is that always the case that the market makers on the other side? And the answer is no. The market maker doesn't have to be on the other side of the transaction. The reason is that these quotes over here are made up of market making quotes and the limit order book. And the limit order book can be anybody like yourself. If you put in a limit order, right, then your order, if it's now the best bid, will get displayed, and anybody could trade against it. A market maker could trade against your order. Another customer could trade against your order. A professional could trade against that order. So anybody's orders could get matched up. It could be customer to customer. It could be market maker to market maker. One market maker thinks that the other market maker's quote is, let's say, too low. And if he's not moving it, he's going to trade it to move that market. So the trades themselves the sides of the trades could be, multiple scenarios, situations. It could be that there's a retail customer puts an order on the book, and everybody sees it, and maybe another customer sees it and says, well, this is I want to trade this, and then a customer can trade against it. A professional could trade against it too. They're professionals scanning markets. They're not market makers. They're mostly, they could be market takers, or they're actively trading, proprietary trading, but they're not providing liquidity as their business. They could trade against it, or a market maker could trade against it and say, hey, you know what? The markets are moving. I have this limit order book. I got to clear the book so I could post my new prices. So they could trade against it. So yeah, there are different scenarios. Sometimes if you see a floor trade, like a large floor trade, a broker can have two customers willing to trade against each other. So they'll bring it down to the floor, and the specialist might say, I don't care about it. Market makers, I don't care about it. Well, the broker says, hey, you know what? I have this customer at Goldman Sachs and this customer at Morgan Stanley, and I contact both of them. One wants to sell this, one wants to buy this. He matches it up and puts it up on the floor of the exchange, and that's it. So that's a customer to customer. It could be one large customer versus another large customer willing to trade with each other, and they're going to put that up on the book. So yeah, there are different scenarios, different situations, and it's not always the case that it's a customer trading against a broker dealer or market maker. I don't know what the percentages are, because the trade itself doesn't give that information. So in each individual trade, you don't see that information. If it was who was on each side of the trade, that's not on the Oprah feed. So it's hard to tell, what the percentages are or which trades are happening. We try to guess, or we try to make an inference based on some of the things that we see. So sometimes you could kind of tell that, all right, this was a cross by, at a midpoint by two on the floor of the exchange. Probably, they had both sides of the market. Sometimes you could tell, that certain spreads go up that look like what market makers would do because of their market making privilege, like, interest rate spreads or dividend spreads. So there's some certain clues that we, from experience, we could tell what's most likely happening, but we don't know for sure every time, because that information is not broadcast. So I guess, the answer is it always market maker on the other side of the trade? The answer is no. That's not going to be always the case. There was a question, I think it was yesterday we were looking at the order sentiment at the end of the day. Somebody said, well, do you look at option order flow or order sentiment kind of like a technical analysis? Um, and
That was
and
fan.
was it? Yeah. So in a way, when you look at technical analysis, there are two ways. Maybe let me separate into two ways you can look at it. Some people use technical analysis, like a chart here. So some people use technical analysis to try to forecast if the stock's going to go up or down, right? But we know that stock prices themselves are random because the information, all the factors that go into a stock price are random. So we can't tell if the next day it's going to go up or down. But you could use technical analysis for other things. One, maybe to explain a range of potential outcomes in certain situations. You could also use it perhaps in a way to say, if I take the price action and the volume, can I put it through some kind of model, chop it up in a way that explains the data to me? Okay, so how do I explain the information using the stock data and the volume data? And you'd have to chop it up. For example, you might want to say, well, what percentage of the volume traded in dark pools versus lit exchange, right? And that could give you a certain information about the liquidity of the stock. You could look at price moves, maybe steep price moves, and then go back and say, well, what happened between this time and this time that impacted the stock price? And that could lead you to maybe there's some kind of important news that came out or something related to that stock that impacted that price. So using price and volume data could help point things out or try to chop up the data in a way that explains a story to us or gives us more information, answers certain questions. And for my, if I was using technical analysis, that's how usually I would, look at it from the perspective of, what is this telling me? What happened here? How can I explain away some of this information? Because prices, volume, these are signals that the markets are sending. And what are those signals telling me?
All right, my friend. Thanks for bringing that to us at the end. That was a lot in the last 4 minutes. Very cool.
Yep. All right. Everyone, look, thanks for joining. Stay safe out there. Have a great trading day and hope to see you guys have a great weekend.
Yeah, Monday we'll see everyone again. Remember, thumbs up, everyone. That's always appreciated. You hit the like, subscribe. Awesome job, D, as always. Have a great weekend, great trading day.